This is the Meerkat. It was a bullish day on Wall Street. I'm in for D7 one more time tomorrow. He'll be back on Friday from his business trip to the West Coast. This is the broad market review for September the 2nd, 2015. Yes, the markets were bullish today. They did a bit of a bounce. Let's take a look here at the numbers. SPY up 1.8. The DIA up 1.8. The Qs are up 2.8%, leading the way up, and the small caps up 1.8 as well. So late day rally here. They opened up and then they dipped during the day, but last half hour or so, boom, the markets came up to close near their highs. Take a look here at Bank. It was also up about 1%, lagging slightly, but they are much stronger than they've been the last couple of days. The VIX was down over 10%, has now actually closed below the 30 mark for the first time in the last week at 26. So, but until the VIX is closed below the 20 for a while, and they would still expect a lot of volatility in the markets. We had silver up 0.5% and gold down 0.5%. Those two have been working the opposite the last couple of days. And then we've got oil. It bounced a little bit here at 1.8. Now, interesting thing about oil, we'll take a look at the chart in a moment. Then we got the dollar is up about 0.5%, and the trend closed at 0.67. And just the trend trade did not quite trigger tonight, but last night it did trigger for you Grok grads out there. It closed at 2.6. So you made some money today if you had played the trend trade. All right, let's take a look here at the daily charts for the S&P 500. And here we are. We came down. We came up, hit our heads at around the 68.1 Fibonacci. Fell down really hard, and now it did bounce back a little bit here. So the big question is, was this just a bunch of short covering for people who thought it was going to go ahead and go down here and test lows? Or was it people beginning to buy into the rally? Or was it just people buying what they thought were bargains? Two significant events that are going to happen over the next few days. China's markets are going to be closed the next 2 days for their observance of World War II. And Monday, the markets are closed in the U.S. for Labor Day. So we are going to have some markets closed here over the next several days. Might be a good time to be in cash. Let's take a look here at the DIA. It did the same thing. It popped up, dropped, and then we did pop up here today, but clearly not back the full drop from yesterday. Then we've got the Qs. They were up the strongest here, and again, they pulled down and they're back up here, but again, not back up to the highs of that swing high. And the small cap Russells were also pulling back up. So we are still in a down leg technically. We just have one up candle here. We'd have to have two to confirm. And let's take a look here at that oil that I talked about. This is the USO chart, but on the oil futures, it was pretty dramatic today. It had bounced up a little bit from the closing yesterday, and it was sinking, and then it had the oil inventories at 10:30 Eastern Time, and it dropped dramatically, and then boom, got pulled up throughout the day to end up closing up just about 1.8%. So pretty dramatic. Even though inventory was bad news and it dropped, it pulled itself back up. Well, a couple of stocks that did not enjoy that big bounce today. Here's one of them, AMBA. During the summer, made a nice killing on this one in our V newsletter, but now it's doing a bear pullback here. But today it continued its way down, even though it dropped to lows. It was down significantly, down another 8.5% today alone. So that one, even though it's a bullish fundamental stock, it's in a very bearish pattern. So would be trading it to the short side, and odds are not in our favor there. Just remember that in volatile times like these, being in cash can be a very wise decision. This is the Meerkat, and Des will be back on Friday for our long weekend. And until then, trade well.